Alright everyone, the next chapter which we are going to cover after the chapter of appeals and revision is the chapter of liability to pay in certain cases. It is a C graded chapter which is there, C graded chapter, but 2 or 3 attempts, one time they go ahead and ask. So let's go ahead and do it off quickly everyone. Okay sir, let's do it quickly. Now everyone over here. Section number 85 to section number 94 is covered in this chapter. You don't have to go ahead and remember any section numbers in this chapter. Let's go ahead and start with the first one. The first one goes ahead and says section number 85, transfer of business. So if one person has gone ahead and transferred a business to another, then who shall be liable? Who shall be liable to go ahead and pay the dues? This chapter just goes ahead and talks about liability to pay in certain cases. This chapter does not come in any linking everyone. So I'll not be going ahead and talking about any linking. It is a chapter which is to be known overall. Okay sir, done. So if there is a person who has gone ahead and transferred the business, who shall be liable to pay the dues? Transferor and transferee shall be jointly and severally liable to pay the dues up to the date of transfer. So if a transfer has happened because of sale, gift, lease, leave, license, hire or any other manner. So sir, supposingly one person went ahead and transferred a business. Everyone, one person went ahead and transferred his business on this date. Then who shall be liable to pay the dues up to this date? They are going ahead and telling transferor and transferee both shall be liable to pay the dues up to the date of transfer. Sir, post transfer, transferee only shall be liable. Up to the date of transfer, both the transferor and the transferee shall be liable. Next, section number 86 talks about agent and principal. Sir, in case of agent and principal, then agent, I am an agent, I am supplying on behalf of principal or I am receiving the goods on behalf of principal. Who shall be liable? Where agent supplies or receives taxable goods on behalf of the principal, who shall be liable to pay the tax, interest, etc. They are telling such agent and the principal shall be jointly and severally. Jointly and severally is a legal term. Jointly means together they shall be liable. Severally means individually they shall be liable. So jointly and severally is a legal term which means together or individually they shall be liable to pay the tax dues on such goods. So if I am an agent, I have supplied on behalf of principal, who shall be liable on the goods which I have gone ahead and supplied? Me and the principal both shall be liable. Next, in case of amalgamation or merger, sir, who shall be liable? Up, they are going ahead and telling amalgamation or merger ka case mein, if supposingly there is A limited and there is B limited, and what happened over here, A limited and B limited were merged by an NCLT ka order. The order came over here and order went ahead and told A and B have been merged together from this date. Now, in between this time, now what will happen once the order comes, then the registration will be cancelled and they will be given a fresh registration as AB Limited. So I am not talking after the order, but before the order. If the order is given retrospective effect, then in between, basically during this time, if A Limited had supplied to B or B Limited had supplied to A, although the NCLT order went ahead and told that they are merged from a retrospective date, but in the eye of GST, during this period, both of them are separate, and if A had supplied anything to B and B had supplied anything to A during this period, that will be included in their respective supplies and they will be individually liable to pay the GST dues. That is what is being told. If amalgamation or merger has happened in pursuance of an order of court or tribunal or otherwise, an order is to take effect from a date earlier to the date of the order. Order takes effect from a date earlier to the date of the order. Then any two or more of such companies has supplied or received goods from each other, then such transaction shall be included in the turnover of supply or receipt of their respective companies and they shall be liable to pay tax. So during this period, if A had supplied to B or B had supplied to A, that will be included in A and B ka turnover and they will be liable to pay the dues. Okay sir. Next. The said two or more companies shall be treated to be a distinct person for the period up to the date of the said order. Okay, sir. Point is clear. Means up to this period till the order comes, they are distinct person, and distinct person, supply between distinct person is a supply and GST shall be payable by them accordingly. Okay, sir. Next, section number 88 goes in and talks about a company in liquidation. So if there is a person who will be liable to pay the tax dues if a company is in liquidation? They are telling every person appointed as a receiver, basically the liquidator of any assets of the company. The liquidator, basically, who is appointed as a receiver of any assets of a company, shall be liable. Basically, the liquidator liable. Once the liquidator is appointed, within 30 days of the appointment, he should go online and he should give an intimation of his appointment to the commissioner. Now, appointed, he should go ahead and inform the commissioner within 30 days. Commissioner within the next 3 months will make inquiry and notify in GRC 24 within 3 months of the receipt of intimation the amount of dues payable by the company. Now the company has to go ahead and make the payment. Basically, the liquidator will go ahead and make the payment. So a company in liquidation, always remember, liquidator is liable. Within 30 days of his appointment, he should inform the commissioner that he is appointed, and within the next 3 months the commissioner will go ahead and tell him what is the amount to be paid. Sir, if it's a company which is a private company, then who shall be liable? If dues could not be recovered from the company, the directors shall be jointly and severally liable to pay the dues. The directors of a private company. Sir, what is the liability? Liability of directors of a private company. If dues from a private company cannot be recovered from the company, the dues could not be recovered, then every person who was a director during such period shall be jointly and severally be liable, unless the director goes ahead and proves that, sir, the non-recovery cannot be attributable to his gross negligence or misfeasance or breach of duty on his part in relation to the affairs of the company, then he shall not be liable. Otherwise, if there is a default of a private company, the directors are jointly and severally liable. Okay, sir. In case private company is converted into public company, then directors are not liable. In case of public company, anyways, the liquidator, the person who will be appointed to go ahead and liquidate the company, he shall be liable. He has to go ahead and inform the commissioner, and commissioner will tell him how much to pay. If private company converted into public company, then directors are not liable, provided that nothing contained in this section shall apply to any personal penalty imposed on such director. Personal penalties imposed on director, that is a separate topic altogether, they are telling. Okay, section number 90 over here. Liabilities of partners of the firm. Sir, what is the liability of the partners of a firm? If there is a partnership firm, who will be liable to pay the dues of the firm? They are telling firm and each of the partners of the firm shall jointly and severally be liable. Always remember, in case of partnership firm, if any liability is there, the firm and the partners will be jointly and severally be liable. Retiring partner or the firm shall intimate the date of retirement to the commissioner, and he shall be liable to pay dues up to the date of retirement. Always remember, once a partner has retired, the firm or the partner should intimate the commissioner within 1 month that I have retired. If you inform within 1 month, supposing you inform you retired here, you inform within 1 month here, 1 month gets over here, you inform within 1 month, then you shall be liable only up to the dues up to the date of retirement. But sir, if I don't give an information within 1 month, I give after 1 month, then you shall be liable for the dues up to the date of such intimation. It says, if no such intimation is given within 1 month from retirement, the liability of partner shall continue up to the date of intimation. Okay, sir. Section number 91, liability of guardian and trustees. So, for a minor, if a guardian is appointed, or for an incapacitated person, if a trustee has been appointed, who shall be liable? So, if there is a minor or incapacitated person and a trustee or a guardian has been appointed to go ahead and take care of the business of the minor or the incapacitated person, if guardian is going ahead and taking care of the business, the tax, interest, penalty, if anything due, it will be payable by such guardian or trustee. It says liability with respect to tax, interest, penalty of a business carried on by the guardian or trustee on behalf of or for the benefit of minor or incapacitated person. So if there is a guardian or an agent who is going ahead and carrying on the business, and the business is basically for the benefit of the minor or incapacitated person, dues shall be recoverable from such guardian or trustee or agent as it would have been determined and recoverable from any such minor or other incapacitated person, as if the minor was not a minor was a major, or incapacitated person was a capacitated person and he was himself conducting the business. So whatever tax, interest, penalty, if the minor was a major, incapacitated person was a capacitated person, it would have been recovered from him. Same amount of penalty, basically tax, interest, penalty, basically they are going ahead and telling they will recover from the guardian or the trustee. So they are going ahead and telling over here, if for the benefit of a minor or a incapacitated person, if there is a business which is run by a guardian or a trustee, then the dues will be recovered. Whatever is the dues of the business will be recovered from the guardian or the trustee. Okay, sir. Court of ward or trustee appointed by court. So, supposingly there is a court of ward. A court of ward is basically a legal body which has been appointed to take care of the property of the legal heirs. Basically, to take care of the property, court appoints court of wards. Okay, it's a legal body which is created to take care of the property. So there is a court of ward or trustee appointed by the court where the estate of a taxable person owning a business in respect of which dues is payable under. So where the estate of a taxable person, so there is a taxable person, his estate, his property is under the court of ward. Now they are going ahead and telling who shall be. Now his estate runs a business. His estate can under one business comes. Now this business ka tax interest penalty is due. This whole estate of this taxable person is under the court of ward or an administrator which is appointed by the court, and the whole estate is being controlled by them, and this estate may there is a business also. Who will be liable to pay the tax interest penalty of the business? The administrator or the court of ward which is being appointed by the court will be liable. It says when estate of a taxable person owning a business in respect of which due is payable is under the court of ward or trustee appointed by the court, then due shall be recovered from such court of ward or administrator general or official trustee in the like manner and to the extent as it would have been determined and be recovered from the taxable person as he was going ahead and carrying on the business himself. So they are going ahead and telling if the business is under the estate and estate is under the court of ward or administrator appointed by the court, then whatever is the tax interest due of the tax interest penalty dues of the business will be paid by the court of ward or the administrator who has been basically appointed by the court. Section number 93 goes ahead and talks about special provision. Special provision in certain cases. Supposingly one person dies, then who shall be liable to pay the tax interest dues of his business? They are going ahead and telling simple. If a person dies and the business is being carried forward by the legal representative will pay the tax interest dues penalties which are due of the business. Sir, if business is discontinued, then son told that I don't want to carry on the business of the father, then in that scenario, whatever is the tax interest penalty dues that shall be paid by the legal representative up to such amount which can be recovered from the estate of the deceased. If business is continued, legal representative or other person shall be liable. Business is discontinued before or after his death, legal representative is liable to pay the dues up out of the estate to the extent estate of the deceased is capable. Sir, what about on partition of HUF? Who shall be liable? Every member or group of member shall be jointly and severally be liable. One HUF was there, partition happened. Then who will be liable to the dues up to the date of partition? Each member or group of member shall be jointly and severally be liable to pay the dues up to the time of partition. Sir, dissolution of firm happened. Firm dissolved. Up to the date of dissolution, whatever tax interest penalty was there, who will pay? All the partners will be jointly and severally be liable for the dues up to the time of dissolution. Sir, there was a minor ke liye one guardian was there. Minor became major. Guardianship terminated. Who will pay the dues? What? Basically, the person who was the minor or the beneficiary shall be liable to pay the dues. So there was a guardian who was going ahead and taking care of a minor. Now minor became major and the guardianship got cancelled. Now who will be liable to pay the dues? The ward or the beneficiary will be liable to pay the dues. Okay, sir. Next. So basically, guardianship or trust is basically for the benefit of someone. The person who is getting the benefit out of the trust is the trustee. Now the termination has happened, guardianship has been terminated or termination of trust has happened, then whoever was the beneficiary, he will be liable to pay the dues. Okay, sir, point is clear. Any other case, discontinuation of business by a firm, AOP or HUF, who shall be liable? Sir, the partners or member of association, family or family shall notwithstanding such discontinuation jointly and severally be liable. Firm is discontinued, AOP, HUF is discontinued, member shall be jointly and severally be liable. Sir, change in constitution of the firm. So for an example, ABC was there, C went off and D came in. Change in constitution of the firm or AOP has happened. Partners or member as it existed before and as it exists after reconstitution shall without prejudice to the provision of section number 90 be jointly and severally be liable to pay the dues for from such firm or association for any period before reconstitution. So whoever is the new partner and old partner, A, B, C is gone, D has come new, A, B, C, D, all four will be liable for the dues up to the date of basically before its reconstitution, whatever the tax, interest, penalty ka dues were there. Sir, dissolution of firm, AOP or partnership firm has happened. Who shall be liable? Dissolution of firm has happened. Partners or members shall be jointly and severally be liable. Here there is a circular which goes ahead and says transferee or successor shall be liable to pay tax, interest, penalty due from the transferor in case of transfer of business due to the death of the sole proprietor. One person died and now the business has been taken over by the son. Who will be liable to pay the dues? Who will be liable to pay the dues? The son, who is the transferee, shall be liable to pay the dues. So basically, they go ahead and say transfer of business includes transfer as a result of death of the sole proprietor also. So if a sole proprietor dies and the business is taken over by the son is the transferee, who will be liable? Transferee or the successor shall be liable to pay the tax, interest, penalty due from such transferor in case of transfer of business due to the death of the sole proprietor. Here we are done with your short and sweet chapter of liability to pay in certain cases. I would like to say this one, and this liability of the partner and special provision. And yeah, this four at least you should study and go. A C graded chapter to be studied at the last, right everyone? I will go ahead and close my discussion on liability to pay certain cases over here everyone.